What is silver, guys? Is it a commodity? Is it a precious metal? I really hadn't given it thought until I had some cool conversations on gold tent. I wasn't sure of what silver. I knew that just looking at the charts, we saw that every time gold went to a bull run, then silver followed suit, giving even better returns. But what are really the macros that were driving that? We don't have all the data, or maybe somebody does. Sometimes the macro drivers, they move. I remember talking or reading Peter Brandt, classical technical analysis, and he was saying I forget the theory, but there's a theory that once you know the underlining macro mover, the major mover, the long-term mover, then it's already played out pretty much, and you're just part of the crowd jumping in late. So my theory right now is not try to overanalyze things. Look at the charts, see where there's correlations that are active right now, what I'm looking at, and just see if I could get some good reward versus risk situations where I have a weight of evidence showing me that I'm about to have an up move or a move in the direction that I want to play. So let's get back to silver. I remember back in the days I did a rate cut probabilities analysis. I look at these charts right here. This one is let's go back down just one little bit. This one right here. So always going back here, that I had analyzed that gold broke out at the same time as rate cut probabilities break out. So you see, this is not the actual rate cut, it's the probabilities of having a rate cut or increasing, breaking out right here and right here. There's two steps, and we saw that with gold. Every time that we broke out the rate cut probabilities, gold reacted right away, started pricing in those rate cuts. This is a silver chart. So right now, this is the first breakout of the rate cut probabilities from the previous chart. When it broke out, that signaled the exact bottom of silver. Silver started moving out. 3 days later, broke out of its descending channel, started pricing that in. After that, started sloping downwards, waiting for guidance. And when the rate cut probabilities on August 1st actually broke out, that was marked the bottom for silver. Silver broke out 4 days later, and right now, sideways move drift, waiting for next guidance. And as we know, that rate cut probabilities have chances for December, even January, February, they're pretty low. So until that breaks out to the upside, silver just twiddling sideways. So what that chart tells me is silver's chart regarding probabilities, rate cuts, very in line with gold. So that's something they're similar right now. Silver for me is acting more like gold than other commodities. So here's another chart. These are the commodities. The CRB. The CRB is a basket of commodities, which is about 40%, 39% energy. That's oil, natural gas, heating oil, gasoline. Agriculture, I think another 20%. And metals in there, 20% metals. And metals, 6% gold, 1% silver, 1% nickel, I think 6% copper, and another 6% aluminum. Pretty much commodities, but heavily skewed on the energy with that 39%. So let's see what happened, how it reacts to rate cuts. Here, rate cut actually broke down when the rate cut probabilities broke out. After that, sideways move. On the second rate cut, probabilities broke down, sideways drift. Here's oil, which is, since it's sweet crude futures, looking pretty much like the CRB chart, and copper also looking pretty much like the CRB chart. And you could see on those three non-precious metals, non-silver, non-gold, there's a little bit of silver here, 1% and 6% gold, not reacting too favorably to rate cuts. Very ambiguous, sideways move, not behaving on the same drivers that silver and gold are reacting to. Now, Let's see silver right now, how it's behaving directly versus the CRB. So that basket of that index of commodities. So here's silver divided by I think Jeffrey Reuter's CRB basket. It started inception in 94, so I don't have data before that. So that's the ratio. Here's the correlation of that ratio versus the price of silver. So if that ratio is going up in favor of silver, how did the price of silver react? Some periods of high correlation, some not. Here we had a good correlation. So when that ratio went up, the price of silver also went up. And right now we're in a period of high correlation. So if that ratio breaks out to the upside, you could assume that the silver price will move upwards. Remember, when a ratio breaks out, it's not necessarily that silvers could go up. It could be that silver, it could even be silver going down, but the commodity is going down even lower or faster, and the ratio will go up. But right now we have positive correlation to the price of silver. So if the ratio goes up, silver price is going to go up, a little bit like the gold-silver ratio. When it goes down, silver has a high correlation with that negative correlation, and the price of silver goes up. Huge base. So that's how it reacted in the past. Base here, multi-year, broke out. Another bigger base, broke out. And this is pretty much the second half of that bull run after 2009 all the way to 2011. Silver outperforming the CRB. So pretty much it's you're beating energy, right? This is oil. It's a light sweet crude oil. So whenever you say CRB, you're thinking commodities. But remember, when you look at the details of that basket, you'll see that it's mostly energy, agriculture, and not very much the metals on a smaller scale. Major low in 2014. October, another low. So a lot of lows were for those precious metals were done in October of 2018. Something happened there. There was a shift. Also remember, that's when the markets started tanking. Maybe the price. That's again theory on a. Maybe they know now that they need to do QE. They need to keep the lower interest rates to drive the markets. And precious metals really reacting to that. Look at that base right here. That's looking like the gold charts or higher lows, breakout line, very well defined on the monthly chart. My greedy target right here, added to the breakout line for a 40% gain from here. And here's the other smaller, less greedy target for that, for the right side of that bottom. So we're approaching breakout line right there for silver versus commodities. So again, behaving more like gold than the rest of that basket. And now here is the silver to CRB, but expressed in Canadian dollars. So just take the ratio and then multiply times USD CAD. And just like we saw guidance with the other fiat currencies, with Canadian dollars being weaker than the US dollar, you can see that we're already attacking for this chart all-time highs. We don't have that overhead. The high of 2011 isn't up here. It's clear skies above. We tested it here once. Wicks, noise from smaller time frames, bring the price action back down. Again, wasn't able to close above, but we're above an inclining 12-month moving average, and slowly we're going to get squeezed all the way to that breakout line. And here is the target right here. Again, silver, gold, they're going to be outperforming commodities. That's energy, that's agriculture, and the other small metals. I don't know why. Maybe some people have more macro thesis on that. But right now we're looking at silver, gold outperforming, leading the rest of the commodities into a bull run. So what's actually going to happen to this CRB index, guys? We know we've covered pretty much silver, pretty much covered gold. The charts in themselves are in uptrends. Gold has broken out already. Silver to follow suit, the miners. But what about this CRB there, this commodity index? We had a breakout here. This is my Bollinger Band madness to see the volatility, contraction, and then when that 64 period Bollinger Band is tight, then you could have a move up or down. Nice crazy bull run right here for the CRB. And after it deflates, we still have some volatility. All that cyan, or I'm colorblind, guys, sorry. All that 64 period, the green or cyan blue. contracting, but there's still some above. I like it tight like this. I like no more of that 64 period Bollinger Band. Not quite ready to go up. So this is giving some other clues that the CRB energy is not quite ready to have a sustained breakout right now. It could fluctuate within this, having smaller cycles, but I'm expecting a channel right here, tight channel, and then after that would have the CRB giving another go for a bull run. Now here is some more deep dive of that CRB index. Still in the downtrend. We saw it on the with the Bollinger Bands that it wasn't quite ready to make a bull run yet. And you got to be careful, like we saw with silver, but right now this is the correlation with silver, this correlation with gold. Yes, there were some periods where they worked in harmony together, high correlation, but right now, since 2016, not much correlations, guys. It's been twindling downwards, even negative correlation where the commodity went down, silver went up. Right now, the commodity, that CRB basket, is going, it could go down or flatline. Gold's going up, negative correlation, silver following suit. So you got to really be careful with those old adages. They have to move together. Always relook at the correlation index, the correlation coefficient. So to better understand the CRB, look, this is what it's composed of. 39% energy, 34% agriculture, 20% metals, livestock, 7%. And you can see here, CRB strong correlation to oil. Not always, but since it's a big component of it over its lifespan, and right now still pretty strong correlation of 0.9. So oil pretty much, or crude oil, moving in the same direction as the CRB. One more chart on the percentage of weight by commodity in the CRB. Here you see crude oil, 23%. The rest of the energy is right here. And you see, like, silver, tiny part of it. Not much weight. Gold, 6%. I don't know why it's weighed like that. Is it the CRB? Is it to calculate costs of running businesses that need commodities to produce whatever they have to produce? I don't know, but that's what the CRB right now is composed of. And the final chart, the gold bugs. So we looked at silver versus the CRB. What's its relationship? We know the relationship of gold miners to the precious metals. And now this is the gold bugs overlaid with the CRB. And here is the correlation. So often I see people overlaying, or I used to do it, or trying to overlay, and then you see, oh look, it's matching up pretty well, and your brain trying to see these big patterns right here, all going up in the same direction. But sometimes your brain is going to omit, look at this period of high negative correlation. So the gold bugs, the miners, working inversely to the commodity, that CRB index, that commodity index. Most of the time, yes, do moving together. But again, another event, like since 2016, they have mean the correlation, positive correlation, has not been seen anymore. Actually has been going over to negative territory right here. So the miners not reacting just like the metals. The miners are reacting more like the underlying metals. They're more in correlation with that, breaking out, lagging them for their own breakouts. But for the CRB, as the CRB has been twindling or going down, the miners have actually been going up. So that correlation right now is heading towards negative territory. It is not perfect negative correlation. The last time it was really deep negative correlation was before that bull run, that precious metals bull run in 2002, 2003. And maybe right now this is a precursor to commodities rise a little later on. So metals breaking out, miners breaking out. And after that, commodities are probably maybe going to pick up after that. The miners and the metals, precious metals, are already breaking out. Maybe the rest of the commodity index, oil, energy, agriculture, all of them maybe follow suit and break out for that long, meaningful commodity bull run. I don't know if that's going to happen now, but this is great. Don't let your brains play tricks on you. Look at the correlation coefficient, see what's up, see what's changed. What we think is going to happen is probably going to be slightly different than what happened in the past. just use those elements to not handicap a decision in your trading framework. Make sure that you're up to date on what's happening out there. All right, guys, that's it for me. Silver doing its thing, and that's how CRB is interacting with all of that. Silver is acting more like gold right now and less of a commodity like what you see in this basket of CRBs, less like oil, more like gold. And until that changes, that's what we got to go on, guys. All right. Thanks for watching. Ciao.